Oh boy, here we go again. Back to work. Boy, what a fantastic day today. It's been a fantastic week, a fantastic month. We are loving this volatility right now in our trade room. Hope you guys are making some money out there too. I know folks are kind of freaking out right now because things keep going lower, but we're day traders. We don't care what direction this thing goes. Anyways, boy, markets are whipping around right now. We got CPI tomorrow. It seems like, and we'll grab the charts in a moment, but it seems like traps, bull traps, bear traps are probably where the money is made tomorrow. Now, in my experience, in our trade room, we use 3 different variations of traps. I want to make sure you know those 3 types of traps because the people who are prepared are the ones that'll make the big profits tomorrow. So charts are ready. Charts look fantastic right now. Enough of the intro, but a fantastic week. Let's keep the good times rolling. Roll those sleeves up and go make some money on what should be another fantastic day on CPI Wednesday. S&P SPY is ready to go tonight. Nasdaq triple Qs are all ready. I have 3 very simple but very important clues on the charts right now that are telling me where I think the winning trades are waiting for tomorrow. One big clue is right here on the hourly chart. I like to use these hourly charts as an overall directional filter. So one big clue we have right now is we are very bearish, obviously here on the S&P SPY, Nasdaq, triple Qs. That is one big clue. That tells us what direction the overall momentum is moving. Now, second clue out of 3 clues here is over on the calendar. There are 2 things on our radar for tomorrow. First thing is the CPI report at 8:30 Eastern time. We know that is going to give us some volatility, but this might be the one time I say this. What is more important right now than that CPI report are tariffs. We know tomorrow's the 12th. We know aluminum and steel tariffs are set to hit the marketplace tomorrow morning. We saw that back and forth between Canada and the US develop here this afternoon. So we know right now, this might be the only time we'll say this year, but the CPI report's important, but it's probably not as important as the ongoing drama that's happening right now between the US, Mexico, and all the tariffs that'll be slowly coming out here all the way until early April. So CPI definitely tomorrow is the big news we know about, but I will certainly be keeping my eyes open on the news wires tomorrow morning regarding tariff talk. Now, let's talk third clue right now. The third clue probably is the most important clue we have, and that of course over now on our tick charts. Now remember folks, we use tick charts to time entries. Tick charts are based on volume. They make entry timing, entry pattern recognition a whole lot easier, and all the time frames you'll need are in the upper left-hand corner. And in case you're watching for the first time right now, that is the 21 EMA. It's pretty much the only indicator we use to find winning trades each week in our trade room. There's one really big clue here on this chart right now, and that is this range right in the middle. In our trade room, we always say anytime we see big move down, big move up, big move down, big move up, anytime we see big moves back and forth like this, there's probably some range right in the middle, and that range is right there. Now, why is that so important? Well, because ranges love to rotate. They go up, they go down, they go up, they go down, they go up, they go back and forth. And we use things like pendulum swings, right? We use things like pendulums. We measure the amount above, the amount below. We use things like expanding triangles, right? To rotate back and forth like this. So if you understand that ranges like to rotate back and forth, well, now we're looking for bear traps to be a buyer down here, bull traps to be a seller up here. Now, I mentioned earlier in the introduction, there are 3 different types of traps, both bull traps and bear traps. Some of them are very simple. Others are more advanced, more complicated. So let's start first with the simple ones. And then as we go deeper into this video, we'll kind of kick this up a few more notches into more advanced bull and bear traps. Because again, whoever's prepared for this stuff are the ones that will make profit. So right now, we're expecting this market now will try to rotate back down, right, and back up again. So as I go lower, I'm looking for bear traps. Now, when I say bear traps, my idea of a bear trap, like over here, right, look right there, look right there. What happens? They run lower, the bears get short once, the bears get short twice, their stops get run, and it pops back up, right? We run lower. Bears get short once, bears get short twice. We call this the 2-try rule, by the way, in our video classes. And of course, some work a lot better than others, right? But those are one very simple way is run lower, trap those bears in. Now remember, when I say 2 tries, I want a higher high in price. Gotta be a higher high. Gotta be a higher high because sellers want to sell high. Once I got those bears trapped in, now I know where your pain is, as we always say in our trade room. Now I know where sellers get stopped out, right? Where they get in pain there and they buy their way out. Now, as the market goes higher here, it wants to rotate. And this is one of the most important things you need to be ready for tomorrow. As it rotates higher, don't just sit there and count your money. Keep your foot on the gas pedal and add to your winner. Now, add-ons. Add-ons are very simple. First things first, a shallow pullback will miss the moving average. Like over there, right? A shallow pullback will miss the moving average. That's the separation I want. Once I get separation, higher high in price, and I want to get in right below that low. Think of this as a bear trap, 2-try bear trap, and an add-on. The easiest way to make a lot more money is to add to your winners, and that add-on trade is very effective. Now, once we get to the other side of that trading range, we do not want to be a buyer up here, right? It's very easy to get caught chasing after these moves here. What do? Do we blindly sell up there? Of course not. We can't just step in front of that freight train. It may keep going a bit higher up. What happened over here? What happened right there? We ran up. The buyers tried once, twice, and it collapses back down again. I want that same pattern. It's a bull trap up here. Buyers try once. Now remember, buyers want to buy low. If you buy something, you want to pay the lowest possible price for it, right? Most of us do. So buyers want to buy low. That means this 2-try, it needs to be a lower low, right? Higher high for a bear trap, lower low here for a bull trap. Now we know where their stops are and we can sell into those stop losses. As it rolls lower, remember, keep looking for add-on trades. And I can't emphasize enough how important it is to get that separation off the moving average, lower low in price. Again, bull trap off the high and an add-on as we go. Bear trap, add-on. Bull trap, add-on. Keep on trading that rotation back and forth. Now, that's the basic stuff. Let's kick this up one more notch here now. For example, I love to go down, trap the bears in, and squeeze those stops back up, right? It works very well in these types of market conditions. But sometimes we get a whoop and run right back up again. Sometimes we don't get a chance to trap in those bears. This is more advanced because this one is much more difficult on the emotions. If it V-bottoms off that low, what almost always happens is we start to grind above that 21 EMA. Now pay attention. That voice in your head is going to be telling you to chase after this. Do not chase after this. Whatever you do, not buy high and chase after it. Do this instead. Mark a trend line off that high. Bring that trend line down around that low. Are you seeing this now? Right now. Very important, very important. Look left, find one of these prior swings. And the goal is I want to get in below one of those prior swings, but ideally, I want the first test off the low of that channel. In our trade room, we call this first test is the best test. So if we don't get the bear trap down there, I'm going to look to buy as low as I possibly can. It's not ideal, but I don't control the markets. I'm going to take whatever the market gives me. I want that first test. It could be a bear trap, like I'm showing you here. It could also sometimes get below that moving average. Bears try once, bears try twice, right? Stop those bears out and squeeze those stops running higher. And don't forget, you better keep on adding, right? If this thing starts cooking, going higher here, that add-on trade, as long as we can get this one before it gets too high up there, that add-on is always something we look for. Now, I want to talk about one more advanced tactic on these so you're ready for tomorrow. Before we dive into that though, let's slow down for a second because I know most folks watching right now, you know these patterns already. You're making money with these traps and add-ons already. But if you're here for the first time right now, this might be a brand new strategy. Don't you worry though. I teach this entire system In fact, I have a ton of trade examples of traps, add-ons, and a whole lot more. Guys, I want to help you time better entries, make money with this stuff. I'll put a link up top here for you, upper right-hand corner for our free trading classes. Hit that link that popped up there. Take that free trading course because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that literally tells us exactly where to find the winning trades each day. More importantly, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, the markets are way too good right now not to be making consistent profits. So if you're still missing the best entries each day, if you've lost your confidence in your current strategy, hit that link that popped up there. Watch that free trading course. Everyone loves all the trade examples I include in that short video series. Best part is it's 100% free for you. Also, too, keep in mind too, guys, I'm going to put all the important links you'll need to learn the strategy. Come join us every morning in our trade room. I post a ton of charts and videos on Twitter or X throughout the day. If you're on Twitter X, give me a follow. Again, all the details you'll need. Most folks start making money all on their own just from that free video class. So hit that link in the description. Take that free video course. It will change the way you look at trading forever. And again, most folks really love it there. So that's where you can learn more about the entry patterns talking about tonight here on the video. Now, where did we leave off? Yes, I mentioned earlier that the bottom. Mark off that high, mark off that low, find those prior swings, hit that first test. We run up. V-top off the high here. We don't get a chance to 1 try, 2 try, and back down again. It just gets whacked right back down again. And again, the hardest part about these V-tops is your emotions. I'm sure I'm not the only person that struggles with this, right? When I was a new trader, if I missed the entry up here, for whatever reason, I couldn't keep my fingers off the buttons. I would chase after it. But I'll tell you, your patience is almost always rewarded in these scenarios. Draw that trend line off those lows, find that channel up off those highs, look left, find those prior swings, and don't miss that first test is the best test, right? We're trading that rotation back and forth. That is 2 out of the 3 different types of traps. Let's go to the Nasdaq now. Let's talk Nasdaq. Nasdaq's getting lonely over here. I'm coming for you, buddy. Here I come, NQ. All right, on the Nasdaq, it's pretty obvious to see right now we're bearish overall. That's one big clue we have. We know we're bearish on the higher time frame. Before I dive into the tick charts though, if you're enjoying this video right now, please help me grow this channel by hitting that like button and subscribing to the channel. YouTube rewards me every time you like and subscribe to this channel. So I know we're all busy people these days. I appreciate you spending a few minutes here every evening on these videos. So thank you so much for the likes, subscribes, all the ongoing support. Now, let's now dive into our tick charts here and get serious. Look at this beautiful range we have right now on the Nasdaq. There's the range in the middle. Triangle lines, we call these expanding triangles, pendulum swings above and below, rotation, right? Rotation. I will tell you right now, most of the days right now are range days. Most days are range bound. So the sooner you learn how ranges work, the sooner you'll start making more consistent money. Ranges used to scare the heck out of me when I was a new trader. But once I learned how rotation worked, once I learned how traps work, right? Look over here, right? Run down, bears once, twice, pop up, run down, bears once. Again, some of them are big winners. Some of them not so big winners, right? But they work so darn well. Now, let's now cover a little bit more advanced tactics here now on the Nasdaq. One, in fact, I'll throw in a couple more bonuses here for folks who are watching all the way to the end. I appreciate you carving out some time tonight to watch all the way to the end of this video tonight. So let's do 2 more advanced tactics here. One, we oftentimes see stuff like this where we'll get that run down, we'll get our bear trap, we'll get a winning trade. I always go a 1-to-1, right? A 1-to-1. We talk about this a lot in that free video class. I always go 1-to-1, move stop up to point of entry, right? And sometimes it'll roll over and stop me out for a scratch on the final position. Oftentimes though, we do get that 1 try, 2 try. It's a winning trade, but what happens is it rolls over and retests that low. This is a great place to do it again. Right? Trap those bears in. We call this a retest trade in our trade room. right? So for example, as we go lower here, don't be surprised if we see a 1, 2, right? Some bear trap here, spike that sucker back up, but do not be surprised if it makes another leg going lower. Now remember, this is not a range breakout. At this point, it needs to go a lot more than that to be a range breakout. We oftentimes see them look very convincing. Remember last night I said earlier in the week, this week, last night I said the scary entries, right? The scary entries, the ones that go up and look very scary, those are almost always the best ones, right? The scary ones, the more uncomfortable entries, the more mental pain you are willing to tolerate as a trader, usually the more gains you'll get paid with. So as it goes lower, this will feel, again, it will feel very scary at that time. But again, now, if it really crushes, we got CPI tomorrow. If it really crushes lower, we'll have to cross that bridge tomorrow morning once we get there, the trade room. But most of the time, though, it'll get a little bit through it. It'll look a bit scary. Then all of a sudden, what happens is we pull back now. Oh boy, the bears try once. Bears try twice. Again, these retest trades can really be very powerful. In fact, I think they're the best ones you get because anybody who sells on that pullback, they're taking their profit. They're buying their way out right here. These are rookies coming in right here and selling right. Those are not professionals. Professionals are not chasing this thing and selling low like that. These are usually easy pickings for a nice short squeeze going higher. So one more advanced tactic for bear traps is a retest trade, right? Write that down, a retest trade, right? Run down, retest, bear trap, same idea. But I want to make sure you're ready for that because again, a lot of folks, they shy away from that retest, but that's oftentimes the one that really cooks for you. Okay, we run up, right? We run up, we get the bull trap off the high, we run lower, all of a sudden something happens, when price jumps back higher again. Now again, if it really, really races through, if it really convincingly breaks through, we'll start looking for breakout pullbacks tomorrow morning in our trade room. But in most cases though, it'll overshoot that high by a little bit. The moving average comes back up again. This is not the place you want to be a buyer, right? This is the worst place to be a buyer. You're overall bearish on the hourly chart right now. Is a range below you? Yeah, no, right? That's not the place to be a buyer right there. If it breaks through, then maybe we think about that more seriously. But right now, though, lower low, 1 try, 2 try. Right? Again, it's that bull trap pattern. Again, these are called retest trades, right? Retest trades, lower low, above that high, bull trap, into add-on, like I mentioned earlier. Okay, are you ready for the most difficult one? Are you ready? Helmet on, mouth guard in? Okay, let's kick this up one more notch here. And if you understand this one, my hat's off to you. This is the upper echelon of traps. Okay, traps around ranges, new ranges. What oftentimes happens when we have a big range like this is we're going to go down into a range, up into a range. There'll be ranges around the edges of this rotation. Okay, now why is that important? Well, because ranges give you all the information you need to make money. Ranges. What do we know about ranges? They love to rotate. So if they go up, the amount above can be projected now down below, right? The amount below can project now above, right? Back above. Okay, they love to rotate. So one very common trap, or for some of us, one gift we get, right, is trapping traders on the wrong side of this, is we'll go to range down here. What will happen is the price will pop up going higher here, and it will shoot going lower, okay? Now, if you have any experience with ranges, the speed at which these things rotate back and forth are real fast. They really are, right? Ranges, they rotate, and when they rotate really fast. Again, the best entries short, like I talked about last night, are scary, right? So when this thing rotates lower, This is going to feel very, very bearish, very scary. But once you learn how this rotation techniques works, the amount above, the amount below, now you know, is this a good place to sell? No, it's a horrible spot to be a seller. So what do? Do we blindly buy it? Do we look for some useless divergent signal on the RSI, right? No, we don't waste some of that. We wait to trap in the rookies. Let the bears try once, bears try twice, and again, that same bear trap or that V-bottom technique I mentioned earlier in this video, right? Any of the basic techniques can be applied in this scenario. Now remember, at this point right now where's the market trying to go? It's trying to rotate the amount below, the amount above, but don't forget the bigger range. There's a bigger range in play. Okay, this is where things get fun because now that trading range, what's going to happen if this thing now begins to jump? If it jumps, where's the market want to go? It wants to go back up and take out that high. In ranges, we love breakout pullbacks, two-legged pullbacks for breakout pullbacks. My favorite technique on these is to get below that 21 EMA, get that same bears once, bears twice, trap those bears in, and back up we go. The bear trap, right? The bear trap below it, the breakout pullback above it. Do you see why this is a little bit more advanced? But once you learn how we can use rotation to buy below it and then above it, buy that breakout pullback, see, that's where you can really make a lot of money with ranges. The same thing goes up here, right? We may run lower, back up here, and now we go up into a range up here, okay? Now think about this, okay? Think about this. We go into a range. We go higher. Bulls once, bulls twice, bull trap, right? Bull trap, running it back down again. The minute that I break that pendulum swing, right? The minute we start breaking down that pendulum swing, now we know what? Now we know breakout pullback, right? Breakout pullback, underbelly of that trading range, trap those bulls in and roll them back down again. We may not get the breakout pullback. May not get it, right? Sometimes what happens is it'll get crushed back down again. We'll get that separation off that moving average, lower low in price, right? And you get that, again, that add-on as we go, okay? And again, don't be surprised. It runs up. We go into a range up here. We go lower first, right? We go lower first, then we go higher. Again, this will feel very, very bullish, but do not lose sight of that hourly time frame, right? We're still bearish, very bearish right now on the hourly. The amount below, the amount above. You want to see scary? You want to see scary? That will be scary right there. That will feel very scary. The scarier it is, usually the better it pays. So as it runs higher here, we start watching now for as it pulls back. Do I see buyers pull back and jump off that moving average? That's a breakout. We'll start looking to buy breakout pullbacks off that. That's a bridge we'll cross tomorrow morning in our trade room. I can't teach everything, unfortunately, in these videos. But the minute I start seeing those bulls once, bulls twice, now we know stops are right there. Again, same basic structure here. It could be a V-top. It could V-top and grind back down. The basic stuff I can apply anytime I want. This range, though, the range framework is really important, though, I want you to remember, right? So bull trap, add on as we go, same stuff, right? Same stuff. Mentioned it before, we run down, breakout pullback, right off the underbelly of that range. Bull trap above the high, breakout pullback off of the low. And again, any of the entry patterns you guys are learning in our free video classes can easily be applied to any of these conditions. All right, so now you know the basic stuff, a little more advanced stuff, and now I think the most advanced part of this are ranges around those edges. Any questions? Go back and watch this video again. Drop me some comments, drop me some questions in the comment section below, and don't forget, that's the plan for tomorrow, but tomorrow morning, the place to be is in my trade room. Every morning, 8 o'clock Eastern time. Guys, I know these markets are tough right now. They're complicated, but I'll tell you, if you have the right game plan, we are loving this stuff right now in our trade room. The easiest way to start making money in these wild markets is to learn and trade along every morning at the opening bell. I'm going to put all the important links you'll need to get started in the description of the YouTube video. Again, start first on the free video classes. Enjoy all those trade examples I include there. Then come join me in my trade room and we'll do it together. In the meantime, guys, be well out there. Be nice to each other. Fantastic job so far this week. Make some money for me tomorrow morning. In the meantime, be here next time. Adios, amigos. Bye for now.